Welcome to the Workbook Solutions for Chapter 7, covering internal controls and cash. On page 12, you'll find the following information for Boatwright Company as of October 31st. Pause and read through the problem. Then we'll go down the list and build a bank reconciliation. Our jumping off points are always the balance per bank statement and the balance per general ledger. So put those items on the bank reconciliation first. Our next item is the deposit made on October 31st. This deposit has already been added to the general ledger balance, but not to the bank balance. So we have to add it into the bank side of our reconciliation. Next, we have the note collected by the bank of $1,260. This item is the opposite of the previous. When the bank collected this note, it added it to our bank balance. But Boatwright has yet to add it to its book balance. So that's the side to which we add it. One more line down, we find our outstanding checks. When Boatwright cut these checks, it subtracted them from the general ledger. But the bank has yet to take them out of its bank balance. So we subtract them from the bank side. The last item on the list is a debit memorandum for an NSF check in the amount of $100. When Boatwright received this payment from J. Smith, it added it to its general ledger balance. It then sent the check to the bank for deposit, and the bank added it to its balance. When the check bounced, the bank then subtracted it back out. That's the debit memo. The end result is that $100 was added to the GL, but not to the bank account. So we need to subtract it from the book side. The last item to consider is the check number 548, which was written for $152, but recorded in the journal as $125. The actual cash dispersed was $152. That's the amount taken out of the bank balance. But the general ledger only records $125. So we need to subtract an additional $27 from the book side. Sum up each of these columns, and we have an adjusted balance per bank of $11,023 and an adjusted balance per books of the same amount. With our reconciliation prepared, we can post our adjusting entries. Remember, the subsequent journal entries are based upon the book side of the bank reconciliation. Effectively, we're just adjusting our cash general ledger balance to report our true cash balance. When looking at the book side of our reconciliation, our additions will always become debits in our adjustments, and our deductions will become credits. For the note receivable collected with interest, we credit notes receivable and credit interest revenue. As for our deductions, I find it most useful to consider the original journal entries in order to decipher where those debits should go. For the NSF check, Boatwright originally debited cash and credited AR upon its receipt. Since the check was no good, we're crediting cash to reflect that the money was not actually collected, and will debit accounts receivable back on the books. J. Smith still owes Boatwright that $100. Pertaining to the utility bill, the initial entry was likely a debit to utility expense and a credit to cash. Since that expense and cash disbursement was too low by $27, utility expense will get that debit. On page 13, you'll see the following example regarding petty cash. Alliance Plumbing Supply decides to establish a petty cash fund of $150 on January 1st. The petty cash fund will be replenished whenever the fund reaches a balance of $20 or less. On February 10th, the fund is replenished and the following receipts for items paid out of the petty cash fund are recorded. Office supplies, $34, postage, $28, store supplies, $12, a minor repair on office equipment, $52, and the cost to FedEx a letter, $10. While it's not mentioned in the workbook, let's imagine that the cash box has $15 in it as of February 10th. All that said, let's record these journal entries. On January 1st, Alliance Plumbing established its petty cash fund of $150. The establishment entry will always consist of a debit to petty cash and a credit to cash for the specified amount. On February 10th, we replenish the cash box. The payment report indicates the following amounts were dispersed for the following reasons. These items will be debits to the appropriate accounts in the journal entry. Debit office supplies for $34. The postage of $28 will likely be grouped with office supplies, so include that in the same amount. Store supplies gets a debit of $12. The repair to the office equipment would probably be booked as a repairs and maintenance expense. Finally, the $10 charge to FedEx the letter will likely be a delivery expense. Our entry's credit goes to cash, which will be $135. The difference between the fund balance and the amount of cash in the box. Remember that we credit cash for how much money we're putting back in the box to restore it to the petty cash's fund balance. At this point, and in a perfect world, our credit would tie with our debits. But the entry's debits total to $136. So we need a $1 credit to make it balance. This amount will go to cash over and short. Also absent from this problem, but worth including, Imagine that at the end of February, Alliance Plumbing decided to raise the petty cash fund's balance to $200. This entry will consist of a debit to petty cash and a credit to cash of $50. Only the transactions to establish or change the fund balance will debit or credit petty cash. If you draw a T account for petty cash, it currently has a $150 balance. The debit of $50 to petty cash brings it to the desired $200 balance. On page 18 of your workbook, you'll find a bank statement and a company's records of its cash balance. Absent from that page is the additional information you see at the bottom of this screen. This problem is boss level, but I'd highly recommend pausing this screen and trying to build a bank reconciliation based upon this information. Once you're done, or if you get stuck, you can proceed with the video to observe the solution. First, we start with the balance per bank and the balance per books. You can find both of those at the top of their respective records. The current balance on the bank statement is $18,453.25, and the balance on the general ledger is $17,404.20. We also know that the bank reconciliation will consist of additions and deductions to arrive at the adjusted balance. Now, we can move through that additional information and fill out those sections on each side of the reconciliation. The first item tells us that on the previous month's bank recon, check numbers 5888 and 5893 were outstanding. Combine that information with that of our bank statement and general ledger, and we can decipher our outstanding checks. So what checks are outstanding as of the end of September? We see our cash disbursements according to our general ledger on the far right side of the page, replete with check numbers, and we see the deductions from our bank account on the far left side of the page, also with check numbers where applicable. The idea of outstanding checks is what checks has the company cut that the bank has not yet deducted. In other words, what disbursements do we have over here that are not over here? Let's start with the general ledger and trace its items over to the bank statement. Starting with 5901, over on the bank statement we see 5901, 5902, 5902, 5903, 5903, 5904, 5904, 5905, 5905, 5906, and it looks like 5906 is not present on the bank statement. So that'll be at least one outstanding check. 5907, 5907, 5908. Again, we don't see 5908 over on the bank statement, so that's yet going to be another outstanding check. And lastly, 5909 and 5909. So here we observe checks number 5906 and 5908 are outstanding. Furthermore, check number 5888 was outstanding as of the previous recon, and here we see it cleared on September 3rd. 5893, however, has not yet cleared, so that check is still outstanding. Item number 2. Check number 5904 was correctly drawn for $2,090, but it was entered into the accounting records as $2,060. You might have noticed this discrepancy when we identified our outstanding checks. $2,090 is the amount taken out of our bank account, but we put the wrong amount in our ledger of $2,060. Think of this in terms of the impact on our cash T account. We reported $2,060 being credited out of cash, but the actual amount credited out of cash was $2,090. We can make our records align with the correct amount by reducing our cash balance further by $30. Since this error was made by the company, it'll be a correction on the book side of the reconciliation. Item 3 references an insufficient fund check from S. Nilsson. If you look on the bank statement, you can see the deduction for the bad check, as well as an associated fee of $10. NSF checks are deductions on the book side of the reconciliation. We added $590.25 on our books, and the bank added that amount when it processed our deposit. But it subtracted that amount when the check turned out to be bad. And it also subtracted $10 as a penalty. Consequently, we have to subtract $600.25 to make our records reconcile. Note that whenever a bank applies a penalty fee to our account for an NSF check, the company will pass that fee on to the delinquent customer. Doing so deters him or her from paying with bad checks in the future. Item 4. we see a credit memo for the amount of $1,500. And the bank deducted a $15 collection fee. We can see the net amount deposited on September 30th if we look at the deposits column of our bank statement. Again, this amount has been added to the bank balance, but we have not yet added it to the book balance. To correct this discrepancy, we need to add it to the book side. If you've been keeping track, we've basically explained all of our disbursements. So we can now focus on our deposits. Specifically, we need to add our deposits in transit to the bank side of the reconciliation. Look back to our bank statement and general ledger. Over here, we have our list of deposits recording in our accounting records. And over here, we have those that have cleared the bank. Just like outstanding checks, we want to isolate the deposits that are in our records, but not in the records of the bank. On September 5th, we made a deposit of $1,103.75, and we see the deposit cleared that same day. On the 12th, we deposited $2,226.90. Again, that one also cleared on the very same day. On the 21st, we deposited $4,093, also cleared. On the 25th, we deposited $2,351.70. That one also cleared on the same day of deposit. On the 30th, we deposited $1,682.75, but we don't see that among our cleared deposits. So that one is still in transit. Now, we've addressed everything except the interest deposit of $12.50. Just like note receivable, the bank added this amount to our bank balance, but we've yet to add it to our company's book balance. Add that item to our book balance. Then sum up each column to see that we have an adjusted balance of $18,271.45. With our true adjusted cash balance identified, we now need to record our adjusting entries. Remember, we only record entries for the items on the book side of the reconciliation. Currently, our book balance for the cash account is $17,404.20, taken directly from our general ledger. We need to adjust it to the correct $18,271.45 balance that we just determined. As I already mentioned, we'll do so by booking journal entries based on the book side of our bank reconciliation. The additions section consists of items that need to be added to our cash account, so those will be debits to cash. For instance, the bank collected $1,485 and added to our account, so we'll debit cash for that amount. This collection was for a $1,500 note receivable, so we'll credit that receivable off the books. Recall that the bank charged us a $15 fee for performing this collection, so that's our missing debit to balance this entry. This item is for a service provided by the bank, so it'll go to an expense, most likely miscellaneous expense. The interest deposited by the bank will be another debit to cash. This is money we earned by keeping our money with this particular bank. Money earned indicates a revenue, interest revenue in this case. Our deduction sections contains items that will be credits to cash. Check 5904 was for a computer purchase. We debited computer equipment and credited cash for $2,060. $30 too little. This credit to cash combines with our previous credit to cash for $2,060 to yield the correct credit amount. This analysis also tells us that we debited computer equipment for $30 too little. So that's where our debit should go. As for our insufficient fund check, we'll put that back into AR. We'll then send S. Nilsson a new invoice informing him or her that he or she still owes us that $590.25 amount, plus a $10 fee for paying with a bad check. Post all these items to the cash account, and our new balance is $18,271.45, our true cash balance as indicated by the bank reconciliation. Yet another way you could book these entries would be to combine them. For example, for our additions, we would keep the exact same debits and credits, then debit cash for the net of those amounts. Same thing for our deductions. Keep the same debits to computer equipment and AR, and credit cash for the combination of those amounts. The end result on our cash account will be the same. That concludes this video on the Chapter 8 Workbook Solutions. Thank you very much for watching. If you have any questions, please leave them in the comments below.